Let's take a look at your other market news now. Warwick Lucas from Galileo Capital joins me now for more on the markets. Thanks for your time on SABC News, Warwick. Big story of the week, some would say, in South Africa, the budget. How are the markets reacting to that 2 days after the fact?
All right, well, basically it was a budget that suggested that South Africa is finally going to get its fiscal position, its fiscal house in order. And basically the bond markets, which probably are the most important markets to impress, certainly seem to like that, so those rates dropped lower. As far as equities go, well, there weren't really any free rides there, and potential negativity on retailers, for example, coming through from VAT hikes on the one hand, well, it's offset to some degree by the stronger rand, so from their side, I don't know that they can complain that much. Okay,
the JSE closing slightly lower yesterday. What factors led to that?
I think that was more of a spillover coming through from weaker commodities and the US generally looking a bit soggier. And we've seen that those factors rebound since, and that's followed through into the JSE today. So.
We're staying with the budget and moving a little bit away from the markets, but the perception and response. We're seeing business confidence improving, we're seeing general sentiment improving, and Finance Minister Malusi Gigaba and Treasury saying yesterday they spoke to all three ratings agencies. With this budget, with what's taking place in the markets now, could we be seeing a change in South Africa's rating this year?
I think this year may be optimistic. I certainly think that the likes of S&P and the other one, Fitch, will be looking for very specific details. Having gone down the road of cutting, I think they will now want to see, well, why should they then revert it back up? So it can take quite a while before a cut rating gets restored, especially at that BB versus triple B level, the investment grade one. So the shortest we've seen before is at least a year in the case of Korea. So it could be the same for us.
Okay, let's go overseas now. US President Donald Trump delivering his first economic report in the States, saying that US economic growth rate will increase to 3.1% in 2018 and remain above 3% throughout 2020. Economists responding and saying this isn't sustainable.
It's quite tricky to say. I mean, clearly the tax cuts are going to have an effect on economic growth on top of what is already a respectable economic growth rate. I think the key problem is it's like giving fizzy drink to a hyperactive kid. It might push that economy a little bit hard, and then the Fed has to rein things in. So sustainability there is going to be quite a trick. I think part of that will involve the Fed sort of trying to head off too strong an outbreak on the upside in the economy, but with some steady, slow but steady rate hikes.
Okay, and staying in the States, their strategic petroleum reserves could decline by about 40% from 2022 until 2027. What effect, if any, would this have on their oil prices, their imports, and us here in South Africa?
Well, I think part of that's going to relate to, well, what's the production balance that's offsetting it. I mean, in the past, the US always had very big strategic reserves because it was entirely dependent on imports, and that has substantially changed, especially with the development of the shale fuel industry. So it may well be that those kind of size capability will be superfluous to requirements and may have no effect whatsoever.
Mm-hmm. And it was Chinese markets' first day of trading after their 7-day lunar holiday. What did we see there and why?
Okay, so the markets are closed from the 15th of February to the 21st. So what we saw there was markets that basically had been set at a level just after the correction of a couple of weeks back, and they'd obviously still been held back by being closed, so we saw quite a nice bounce there from them on the day that they opened.
Let's come back to South Africa, and what big news, market news, should we be looking out for in the coming weeks?
Okay, I think we've had the broad pronouncements and the statements of intent, and now I think the devil is going to lie in the details. So those details are going to be watched for very closely, namely pronouncements on future economic policy and the actual hammering together of those broad promises. Now time for the tires to actually hit the road.
Warwick Lucas from Galileo Capital, thanks for your time on SABC News. It's